Good evening everyone, Rahul Chaudhary here. Today is 8th May 2026. Let's get started with the market brief of the day. So we are entering into a potential stagflationary macro environment and the institutions are already repositioning. The biggest catalyst now is the Strait of Hormuz crisis. After US strikes on the Iranian military targets, the oil markets reacted aggressively. The Brent crude surged above $100 per barrel. And this matters because the Strait of Hormuz controls a massive portion of the global oil supply. If the supply disruption continues, inflation pressure will rise globally. At the same time, the US labor market remains strong. The jobs data came hotter than expected, the wages are still rising, and that reduces the probability of Fed rate cuts. The new market is facing a dangerous condition: higher oil prices, sticky inflation, and higher interest rates for longer. And that's a stagflationary setup. And historically, that environment hurts high valuation growth assets. Now watch what's actually the institutions are doing. Capital is rotating away from crowded momentum trades and moving into energy, infrastructure, commodities and defensive assets. Because when the inflation returns, hard assets usually outperform speculative growth. And the volatility is also starting to rise again. And when volatility, oil yields rise altogether, liquidity conditions tightens very quickly. And that's where the emotional retail traders are punished. And we are also seeing the divergence globally. The Fed remains relatively hawkish, while the Europe and Japan are trapped between weak growth and rising energy inflation. And that continues supporting dollar strength. That's all for today. I'm Rahul Chaudhary. Follow for institutional grade macro analysis and serious trading insights. Trade with discipline, trade with patience, and stay ahead of the crowd. That's all for today. Thank you.